Terms mutual funds and managed funds are similar but differ slightly, especially in how they're used in Australia versus other parts of the world. Here's a breakdown. Let's start with managed funds. These are common in Australia. They're professionally managed investment vehicles where investors pool their money to buy a diversified portfolio of assets. This includes index funds and ETFs. If you're watching my videos, you're probably in Australia, so this is relevant to you. Mutual funds. This term is more common in the United States and other countries. They are also pooled investment vehicles but are structured differently based on local regulations. Structure. Managed funds in Australia are typically structured as unit trusts. Investors hold units in the fund with their value linked to the underlying asset's performance. Mutual funds are typically structured as corporations or trusts in the US. Investors own shares rather than units, and dividends may be distributed directly. Regulation. Managed funds are governed by Australian laws such as the Corporations Act and regulated by ASIC. Mutual funds are governed by US laws like the Investment Company Act of 1940 and regulated by the SEC. Accessibility. Managed funds in Australia cater to both retail and institutional investors with minimum investments starting around $1,000. They include superannuation funds and ETF platforms. Mutual funds in the US have various minimum investment levels and are popular in retirement accounts like the 401ks. Types. Both managed and mutual funds broadly cover similar types of funds, including active funds where fund managers actively choose investments. Passive funds like index funds that track an index, for example the ASX 200 or the S&P 500. Sector-specific funds that focus on specific industries or asset classes. The bottom line is, if you're in Australia, you'll be dealing with managed funds, which is a local term. If you're in the US or reading international finance material, you'll see mutual funds instead. How to invest in Australia. You can invest in managed funds directly through major providers like Vanguard and BlackRock. Their websites offer a list of managed funds to choose from. However, in Australia, it's easier to invest through an ETF. For example, let's look at the Vanguard Australian Shares Index Fund. You can invest in the managed fund by opening a Vanguard personal investor account, but this locks you into the Vanguard ecosystem, which is fine if you only like Vanguard products. Alternatively, you can invest through the ETF version. The ETF version, which is VAS as shown here on their website, can be bought through any Australian online broker. So you're not just stuck using Vanguard, giving you more flexibility. This is especially useful if you want to keep all your other investments, including other stocks, in one place. By the way, the secret word today is SOC, so let me know down below if you made it this far. If you're interested to learn how to invest in ETFs, go check out this video on screen where I'll provide a beginner's step-by-step guide on how to invest in your first ETF from Australia. Thank you for watching, I appreciate you, and I'll see you in the next video.